It's time now for today's strategy session. U.S. stocks pulling back to start off today's session from those record highs that we saw on Tuesday, but with the market trading near its peak, where can investors find their next opportunity for yield? Joining us now, we've got our markets reporter, Josh Schafer. Josh, where's the next opportunity?
Overseas, Brad, right?
Okay, right.
That was one thing we wrote about this morning
ready.
in our morning brief newsletter, right? Was sort of the catch-up trade people have been finding among global stocks, global equities, actually starting to compete with U.S. equities to start 2025. But one thing I sort of broke down in that column as well, guys, is really it's kind of the same as the catch-up trade that you're seeing within U.S. equities, right? So if we look at the S&P 500 and look at the top performers this year, I'll read through a couple of them right now. Intel, Supermicro Computer, CVS, Airbnb. If we look at all those stocks and thought about what they did over the last year, they all have something in common. They weren't very popular stocks in 2024. And so I think what you're seeing really across the market, across sectors too, when you look at the sectors, materials, energy, some of the best performers in 2025 thus far, what do they have in common? They were laggards in 2024. So you're just seeing a lot of catch-up trade, a lot of rotation, something we were talking about yesterday off the B of A Fund Manager survey with cash levels so low. Investors aren't leaving the Mag 7 and leaving the market, right? They're leaving the Mag 7 and putting money to work somewhere else. So we're seeing a lot of action in these different catch-up trades. Of course, some individual stories going on there too. I mentioned Intel. There's potential M&A rumors. That's also why people are piling into that stock. But generally speaking, I think we're seeing a clear trend here of stocks that did not perform well last year. People are looking for some way to find outperformance this year, and it's outside that Mag 7 cohort thus far.
And it's interesting, too, given that we are in tax season. I remember Steve Sosnick teaching me that you see some of these underperformers starting to perform really well suddenly in the month of February every year. What does that tell you about what investors are doing with their capital gains taxes? Having said that, Josh, I think it's really interesting to think about kind of where we're seeing the market momentum coming from. And it does seem like we're cementing a narrative that it's no longer driven by those Mag 7 names. Does something like Nvidia earnings coming up change that? Do we get a return to those Mag 7 names as people look for more of a safe haven trade?
It certainly puts them back into focus next week, right? When we think about the different sort of headlines we have coming at us, I would imagine the tariff headlines are going to heat up a little bit more leading into March next week. But also it seems like Nvidia is probably the headliner next week, Maddie, yes. And we've sort of been waiting for more commentary post DeepSeek, right? And I bet that's going to be a big focus of that call. I mean, Mag 7 earnings outside of Nvidia didn't really do a lot for that cohort, right? Save Meta, which has done very well this year, and the market seemed to like their earnings. Earnings haven't been that friendly to the group thus far, so it'll be interesting to see how it works for Nvidia. I mean, Nvidia, even the last couple quarters, hasn't necessarily seen a big pop in its stock, right? You look at Nvidia shares over the last couple weeks, it's been on this trend of rallying into earnings, but not necessarily rallying post earnings. But we know what they say can sometimes drive a little bit of an AI narrative. But I would argue, generally speaking, the AI trade is still performing. It's just not really the Mag 7 at this point.
I want to come back to what we can effectively call your passport trade a hot second ago here, because this was something that was also evident within what Macquarie was saying, and that hit our inbox yesterday, talking about globally they see areas of opportunity, valuations outside the U.S. more attractive, economic stability scarcer though. They did warn and caution here, and I wonder how traders are kind of balancing that, the economic side of the potential instability of some of those markets versus where the valuations present an opportunity.
Yeah, Brad, so the valuations definitely present an opportunity, right? And then, as you said, sort of the variable is economic growth. But one thing that was interesting that I was looking at yesterday, if you look at sort of just consensus projections for the Eurozone or for UK economic growth, GDP growth, it's supposed to tick up slightly in 2024. Into 2025, if you look at the US, we're supposed to come down, right? And very often in investing, we're talking about rate of change, not necessarily level, right? Where is my growth increasing? So I think part of what investors are seeing across the globe is, okay, across the globe, economic growth hasn't been that great in a lot of areas for the past couple of years, not nearly as strong as the US. But if it's gonna pick up, then perhaps that's my area of opportunity. Again, you mentioned a lot of variables. We haven't even gotten to the point of talking about Euro tariffs yet, right? And what if we start tariffing those countries, and how does that impact them? But just generally speaking, they're coming off a lower level, so there's perhaps more room to outperform. When you're looking at the US economy, we're expecting about 2.2% annualized GDP growth. There's not a ton of room to outperform there. I mean, there is, but that would be very impressive from the US economy. So we're sort of priced in a lot of positive growth here, and people are arguing outside of the US, we haven't priced in a ton of good news. So maybe there's opportunity for some more good news to come in and actually be a catalyst there. We've already had a lot of strong catalysts here over the last couple of years.
Certainly. One of them, though, that's a big question mark, and I love this line from BNP Paribas saying this morning that the Fed is comfortably numb right now, and that's not necessarily going to be a catalyst for Wall Street this year. So something we'll continue to monitor. Josh, thank you so much. Appreciate it as always.